consider to be the most important takeaways people in today's webinar should keep top of mind moving forward?
So, Deborah, I'm happy to take the first crack at that,
sure,
if that's okay. So I think mine are pretty simple. I think that as Deborah just said, there is a focus on accounting and financial reporting cases. It is not going away. It has received, the fraud group has received internal support at the staff level and technological support through CIRA and enhanced data analytics tools. That's point one. Point two is that rather than simply dealing with did you get the accounting right and did you use the right words in your disclosure, there is now an emphasis on did you have the appropriate controls in place that are critical to your financial reporting process. So do you have a mechanism in place where you can do risk analysis across the organization, identify if there are weak areas in your internal controls for financial reporting, and remedy those? Third, how do you deal with your auditor? How do you interact with your auditor? What's the quality of the relationship? Don't be too close, because then you have issues of independence. Don't be too hostile, because then you're not able to work through what are very difficult, delicate, and subjective evaluations relevant to what constitutes control deficiencies or material weaknesses. And in this environment where the external auditor itself can often be exposed, that relationship is a difficult one and fraught with risk for the company if not handled appropriately. Thank you.
Bill has highlighted some really important points. I'm just going to add briefly that one of the key takeaways should be that companies should be proactive in addressing these kinds of issues. And building on the point that Bill made with respect to internal controls and whether they're working properly, the time to gain that understanding is before you get a request for information from the SEC, before someone who used to work for the company or currently works for the company blows the whistle to the SEC about a perceived issue. Companies can avoid a lot of issues if they take the time to understand their risk profile and to periodically evaluate how they are responding to those risks. And a company that does that will find that resolution of all of these other issues will become much easier in terms of how to properly account for the issues, how to disclose issues, and should the SEC come knocking on the door, how to quickly be in a position to persuade the SEC that in fact there is no issue. And so, from my perspective, it is really important for companies to be proactive and know their business and be prepared for the types of issues that we've outlined on today's presentation.